Want to know what's going to happen to mortgage rates in 2023? This week is the most important week for mortgage interest rates of the whole year. Stay tuned. In this video, I'm going to tell you why it's the most important week, what we need to pay attention to, and I'll do a little forecasting in advance like I did last week. All right, Matt, the mortgage guy, residential mortgage broker, 1 to 4 unit purchase and refinance across the country. If you want to connect me and my team, go to greatmortgagebroker.com. Fill out the form. Let us know where you're at and how we can help. In today's video, I'm going to talk about why this week, the week of December 12th, 2022, is the most important week for mortgage rates, the most important week for thinking about what direction mortgage rates are headed in 2023. I've talked about it before. Inflation plays a big role in mortgage interest rates. Last month, November 10th to be exact, when inflation numbers came in lower than expected, it had such a dramatic effect on interest rates. It was the biggest drop in mortgage interest rates in a single day in literally recorded history, right? So when I tell you that tomorrow, December 13th inflation reading is important and impactful for mortgage interest rates, that's an understatement, right? So just like we did last month, I'm going to show you. This says Monday, December 12th, and I'm recording this video at 9:45 a.m., 24 hours in advance of what inflation is coming out, right? December 13th, tomorrow, 8:30 Eastern, which is 5:30 a.m. I don't know if we did a good enough Zoom job here, but that says December 12th, right? So I just want to verify that I'm recording this in advance. So if I have any type of predictions, is that Zoom? Come on, camera, you can do it. Anyhow, December 12th, it's December 12th. I promise you that. So we don't know what that CPI number, AKA inflation, is going to say on December 13th, but that's very important. And then the very next day is the Fed meeting where they are going to let everybody know we're raising the Fed funds rate by 0.5% or whatever it is. More importantly than what they do is what they say, right? And we've said that time and time and time again. We expect a 0.5 point increase to the Fed funds rate on December 14th. That is almost a foregone conclusion. That is almost insignificant and shouldn't be a market mover at all. What's more important is what they talk about for the future. And what they talk about is 100% going to be dependent on the inflation number. So let's rewind real quick and talk about last month. Then we can get an idea of what we expect for this month. And I'll do some, guesses here a day in advance. But last month, the expectations from the market were at 8.1% year over year reading in CPI and a 0.6 month over month reading in CPI. You can just replace CPI with inflation, consumer price index, fancy way, it's a measure of inflation. And we know that as inflation goes, mortgage interest rates will follow. If it goes up, interest rates will go up. If it goes down, mortgage interest rates will go down, partly because of how the Fed is going to react to that, right? If inflation is hotter than expected, the Fed is going to tighten more and be more restrictive with monetary policy, which is going to have a negative effect on mortgage interest rates. You don't have to get too in the weeds on that. Just know that last month, when the readings actually came in at 7.7, remember the expectation was 8.1 for a year over year number, and then 0.4 on month, that was better than expectations. Inflation was lower and trending down. That had such a dramatic effect, like I said, the biggest single day move in recorded history, because it showed inflation's going down. The Fed was able to start talking about, we can slow the pace of increases, get to, our target rate sooner, and then take our foot off of the gas, is essentially what they said. Here is the issue with tomorrow's reading, December 13th, is I think our expectations, or the market's expectations, are too bullish, right? The market expects year over year to be down to 7.3. The market expects month over month to be down to 0.3. While I do think personally that inflation is headed down, this is rather bullish. Last month, we had some easy targets to hit. I think that's why we're able to exceed expectations when we're talking about the downside and inflation coming down. This month, it's going to be a little bit harder, right? 7.3 is, pretty bullish as far as inflation coming down. So tomorrow, December 13th, I expect us to come in right around this number. Last month, I said we're going to come in lower than 8.1. I don't know if I said 7.7 or 7.8, but I was pretty close. And, for once, I look like a genius because I predicted it correctly. I recorded it in advance. Genius. Mortgage interest rates are coming down. Pat myself on the back. Not really, but whatever the case, me and Zuber had some fun with it. And we talked about the fact that I was right, he was wrong. This time around, to expect inflation to come in better than 7.3, lower than 7.3 is even bullish for somebody like me. To expect it to come in lower than 0.3 is a lot to ask as well. So what I am putting out there to the universe is us hitting expectations, 7.3 year over year, 0.3 month over month. And I think that while this won't have a lot of positive impact on mortgage interest rates, it also doesn't allow mortgage interest rates to start to slide back up, right? If we come in at 7.5 and 0.4, that is going to have a negative impact on mortgage interest rates. Part of the reason why I'm advising all my clients, if you like it, lock it. We don't want to gamble going into one, this CPI reading on December 13th, and two, the Fed fund or the Fed meeting, the Fed funds rate announcement on Wednesday, December 14th, because it has probably a better likelihood of getting worse than getting better, right? We had easy numbers to hit last month. We exceeded those. Things got a lot better. The numbers are more bullish this month, and it's going to be harder to hit. So with all of that being said, pay close attention. If you're buying a house now, if you're buying a house in Q1 of 2023, these are the things we want to watch, not because where interest rates are determines whether you buy or whether you don't buy, but you want to have a firm grip on what's the housing payment I'm looking to get into? What is my purchase price times this interest rate mean on a monthly payment? Because for an investor, it might mean I can't pay $475 for that property anymore. I'm going to offer $450 because rates are this. Or it might mean the numbers worked at $420. If rates got better, I could go up to $440 and still make this a great investment, right? And so you want to know what the interest rates are and what they're doing to guide your decisions, not to guide your decisions in a yes buy or no don't buy, but what you can pay. Because we all know, and sellers are slowly but surely learning this, that buyers buy based on monthly payment. Even the investors, right? Because they're buying based on cash flow and things like that. So the mortgage interest rate has a direct impact on monthly payment. So you should know what it is, where it's trending, how it, integrates to you and your plan and what you're doing. Any questions at all, please feel free to reach out. Again, like I said, if you go to greatmortgagebroker.com, fill out the form, you can connect with me and my team. I'm excited to see. We're going to have some volatility this week, I think. Whether it's good, bad, or ugly, we're going to see. CPI number, December 13th. And actually, this video is probably going out after that number is released. December 14th, the Fed funds meeting, and we expect 0.5. We're going to really listen to what they say, and that is going to have an impact on mortgage rates into the future, what they talk about doing in the February meeting and beyond. So stay tuned if you're investing in real estate at all. I got a lot of videos. I'm live every Monday at 3 p.m. Pacific Standard Time. We're talking about this stuff. We're tracking this stuff. We're trying to follow the market as close as we can. Keep a finger on the pulse. Check out the next video.